Hello? Hi, it's me, CryptoClick. Yeah, I notice you're trading on crypto exchanges, but without any benefits at all? That's madness. You know, I've been made an affiliate partner with pretty much every exchange out there, so if you want to get some benefits, you might as well set up exchanges with the links that I've got in the video description or in my Telegram and Discord. You can get welcome bonuses for signing up, or even better, up to 20% off all your trading fees for life. Yeah, I know, what a treat. So next time you fancy setting up an exchange, use some of the links that I've got in my video description, because otherwise you're mugging yourself off. Anyway, enjoy the rest of the video. Hello everybody, welcome back. We're going to look at Bitcoin's long-term history. We're going to think about the 4-year cycle, and we're going to think about, is there anything different this time round, right? Is there anything to be worried about? You know, we've already broken down below the 20 weekly, which has not happened before really. Yeah, and yeah, there's a 4-year cycle, and you've got Michael Saylor still, you know, touting for the moon. You've got all these other people, you know, big players like Max Kaiser, who probably, you know, doesn't really matter if it's $1,000 or $1 million. He's loving it all the same. But is there anything different, basically? So obviously, we'll put aside the fact that the world is about to get swallowed into a big financial black hole, potentially, right? So you know, the drying up liquidity, basically the rate hikes, all this sort of stuff. You know, the geopolitical problems, the supply chain issues. You can go on forever, right? So just forget about that for now. Let's have a look at this chart on its own. Is there anything different going on here that we haven't spoken about? And I think there might be. There might be. So first of all, these white lines represent halvings, the ones that have been and the one that is due to be, which is roughly around 1st of April 2024. So give or take around that date. And what we notice is that we get peaks and bottoms, peaks and bottoms, peaks, and at some point there'll be a bottom, right? That's yet to be decided, and these take place in between the halvings, so that, you know, once the halving has happened, we get the latter part of the run, the parabolic run, and then we get the bear market finding the low. Then we run up into the next 4-year halving, right, into a parabolic run. It's cycle, rinse and repeat, basically. So with that in mind, yeah, we've gone through all of this before. There's nothing different there. We would, you know, be expecting a low to be formed around this kind of area, you know, roughly between now and the end of this year, beginning of next. The low should be in by then, and then we'll start to trickle up, running up into the next halving, where, you know, normally you find a little bit of a plateau or sometimes even a dump. And then the last stages of the bull market resume, and we go up to areas on the chart which, you know, we don't know where they'll be, but some people like to say 100, some people say 2, some people say 1,000,000. If we continue with this trajectory, I mean, the exponential growth of the price of Bitcoin, you know, I mean, technically it is exponential. There's only 21,000, blah 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 blah. You've heard it all before, but you know, what's different? So if we'll just go to our basic stuff, which is RSI. You can see that since these last 3 bear market peaks, bull market peaks, there's been bearish divergence the entire time on both money flow index and on the RSI. Whoa! Now, if you think about what that really means, is that if this was any kind of trend of any kind of form, then you'd be like, all right, 3 tags of bearish divergence, I'm out. Well, this is you know, this has been slowing its momentum for a long period of time now. We're talking a monthly chart here, so this is 1 bull market top, 2 bull market top, 3 bull market tops. 12 years basically of history there. Not 12, but yeah, quite a long period of time. Basically, we're talking 9 years of history of tops. So more or less 3 market cycles that we've got going on here. So what does this mean? What does it mean? Well, so far I don't mean anything, but if you were to look at that on a 5-minute chart, a 15-minute, an hourly, a 4-hourly, a daily, a weekly, or whatever, normally 3 drives of bearish divergence is a bit of a pain in the ass, basically. And with that in mind, with both the money flow index and the RSI as well, it would suggest that this change of behavior that we're getting right now, so basically breaking down below 20 weekly, could be something to consider, and with that could come serious lows on Bitcoin, right? So it doesn't have to, but if it did, then all of this uptrend could see significant lows down to maybe even as low as our previous bull market beginning. So we're talking between 3, 4, 5,000. And the reason I say that is that you would expect a significant retracement after the third amount of bearish divergence that would basically break the actual uptrend, and this would have broken the uptrend massively. And so for those people that are out there saying, you know, 10,000 is the floor, or some people say 10,000 is unlikely, or some people who say, you know, Bitcoin can't do this or can't do that, well, it can. It might, probably won't, you know, as it comes down to these significantly low levels. It would take a fair bit of momentum to break those prices. But at the same time, like, it wasn't that long ago that I was buying Bitcoin, you know, below 4,000. And if you think about what we're looking at here is a monthly chart that just has gone up continuously, and then it got absorbed into traditional markets around this period here. So we got sucked into the system, and the system is breaking down for the best part at the moment. And we've all seen things which some people call unreasonable on things like NASDAQ. So we've seen the .com bubble. That was a massive retrace, what, 85% or something along those lines in the 80s. We've seen other problems in the financial markets like the 2008 crash, huge collapse in traditional markets there. So we are absorbed into traditional markets here for better or for worse. Some people think it's great. I would say, you know, it was always going to happen, but to see the correlation at this stage now is not particularly, it's not a great look, considering the inflation issues that the whole world has got and how this might transpire onto a Bitcoin chart. So all I'm saying is that we do have on the monthly huge drives of bearish divergence over the last 3 peaks of the last 3 market cycles, basically, and with that could mean a dramatic change of behavior. So the best play in many ways would be a defensive one. Now, I'm not going to beat around the bush. Obviously, I've made a load of money these last 3 years just from trading Bitcoin and everything like that, so it's done pretty well for me. But if I was looking to get into crypto for the very first time, now would be probably at this stage now that we see this and things have become a little bit more clear, well, not clear, but there is maybe a shift in the narrative here, that the best thing would be to see how this last stage of the bear market plays out. And if that is the case, then we'll be looking to find a low, like I say, between November, or around between September, November, December. So the fourth quarter, as far as this cycle of its own 4-year cycle is concerned, we'll be waiting to see how that plays. And if it continues to play as normal, then that's fine. You know, we can live with that, and that will be fine. The model continues. We would also have to navigate our way through traditional markets to see how they're behaving and what situation that, you know, they're having to, what living conditions they're living under at the moment. And again, this is all like quite a little while away, but it's not too far away. So if you're looking and you've got money on the sidelines, you're looking to get into crypto for the very first time, so buying into the last stage of the bear market is probably not the greatest idea. Waiting to see if the model continues and the traditional markets haven't basically dissolved into, you know, pixie dust, then maybe we can continue with this, and we would expect those 4-year cycles to continue just as normal. To be honest with you, the 4-year cycles will always most likely continue because they're based around the halvings, which basically take place every 4 years. So they can't be taken away. They will always remain. 4-year cycles will stay the same as they are based on that. But will they continue with this up-only trajectory is the question. I think it probably will, despite what I've explained, but it may not. And if it doesn't, we have at least been given a clue here as to why it might not. Like I say, it is worth recognizing that there is a subtle change of behavior this time round. This last market cycle has had differences in it that the other ones didn't. So without going into all the details of what those are, there were basically things like breaking down below weekly moving averages, like the 50 exponential each year. So from 2019 we did it then, did it in 2020 and 2021, and obviously 2022 we've done it again. We'd never done that previously. We'd only go down below the 50 exponential on a weekly if we were in a bear market, but that wasn't the case. Let's see if I can just show you here. Get it on the weekly. But yeah, I mean, like I say, it's worth talking about, although it might not be something that we need to take particularly seriously. So yeah, here's your 50 exponential on the weekly broken down there, and we did break down for it here. Broke down, yeah, so that was 2019, this is 2020, and over here was 2021. That had never happened before. It would only ever happened in a bear market. So bear market begins here, all the way down, reclaim it, bull market. Same over here, never even barely touched it. So there has been differences, and this will happen the more and more the market cap inflates, I'd say, because like I say, there will be diminishing returns on Bitcoin anyway, even if it remains in its 4-year cycle. So, and we can see that each bull run. Well, anyway, that's probably not the way you want to start your day, but nevertheless, we've done it now. So it's all out there for you to digest. But the best thing to do for any new money coming into this environment would be to probably just sit and wait. Now, this doesn't necessarily mean the end of crypto or anything like that. Bitcoin can go. I've always been in favor of altcoins, top cap altcoins, eventually surpassing Bitcoin, just as normal business models achieve, extreme success. Blockchain is definitely here to stay, and through that would come valuation of cryptocurrencies, that are used within, utilized for utility tokens for the blockchain. This is just Bitcoin. Bitcoin can lose its market cap to Ethereum or Polkadot or ICP or whatever. These things, not inevitably, but very likely will one day take over the #1 spot. But for Bitcoin, like I say, this is just something to be aware of, and not to be massively surprised if it were to happen. It wouldn't mark the absolute end of Bitcoin. It would just mark the new beginning of something else. And the overall direction will probably still continue to be up. But it doesn't mean we can't print a significant low, which, again, you got to put it into context. Significant low compared to the all-time high, yes. But significant low compared to, somebody who bought into this asset, only like 4 or 5 years ago or less, it's not too bad. Anyway, I've said enough. You're going to unsubscribe to this because that's a very unpopular thing, but it's worth thinking about. Anyway, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.